Hey, welcome back to YT Finance, and today we are talking about Mullen Automotive, SoFi Technologies, Neostock, as well as Tesla. We're going to start off talking about the MULN share price and why it recently popped up by around 5%. We're also going to analyze this article to determine whether or not Mullen Automotive will continue this very bullish momentum in 2023 while their share price continues to rise. After that, we're going to move on and talk about SoFi Technologies, and we're going to determine whether or not SoFi Technologies' share price and their overall stock is being manipulated by various shareholders. So we're going to be dissecting who owns the most SoFi Technology stock, if anything strange is happening with this company in the form of price manipulation, and if this company is still a good investment opportunity throughout the year of 2023. After that, we're going to move on and talk about NIO's delivery numbers for the fourth quarter and what their overall growth trajectory and whether or not NIO can actually continuously keep up their current growth rate, which is currently pretty phenomenal. Then lastly, we're going to talk about 10 things that Elon Musk needs to change in Tesla, which will make Tesla absolutely surge in their overall share price, which will lead us into talking where the TSLA share price and stock price could be for the year of 2023, and if Tesla is a good buying opportunity right now, considering that the share price is rather low. So for more videos just like this one on any of these companies, remember to go and smash that like button right now, comment down below what company you want me to analyze next, or if you want more videos on any one of these companies in this video, subscribe if you are new, and without further ado, let's jump right into today's stories. Mullen Automotive, if you don't know, is an electric vehicle company that currently trades for just 28 cents per share. This is a newer startup electric vehicle company, and many investors are split on whether or not Mullen is a good company to invest into right now. Mullen's share price has been extremely bearish, which means it's been negative, but as of late, Mullen Automotive has defied the overall bearish expectations for this company, and that would be negative expectations for their overall share price because it's been falling, but recently we've seen them actually increase in their overall stock price, which has been encouraging to various investors. Mullen managed to generate a strong return during the last trading session of 2022, which has caused the MULN share price to actually surge by around 5%. Now, the majority of investors in Mullen stock right now don't actually think this company is a long-term buying opportunity, but rather they're looking to trade this company, which means they're hopping in now while the price is cheap, and they're waiting for a short squeeze, which essentially means that many investors are shorting this company, which means they're making money as the share price is falling. But eventually, if this company receives a large enough catalyst, or if enough demand pours into this company, it's going to cause the share price to actually explode and surge upwards. And that's what current traders are trying to time right now, but there is a possibility that a short squeeze may not even happen. It's definitely a risk and a gamble in terms of if this will happen or not. But as of late, we almost got a short squeeze with the MULN share price generating around 6% gains after the start of the morning's trading session, and then another 5% later. In the last 5 trading sessions, the electric vehicle manufacturer was actually up around 27% in overall equity value. However, the overall share price remains deeply in the red and negative, and if you bought during the beginning of 2022, you have lost a lot of money for this particular company. Again, many investors are only in this company temporarily. However, for me personally, I would rather not allocate any money to this company until after this company proves itself, whether that be in deliveries, overall profitability, or very comforting financial metrics such as a load of cash on their balance sheet. But as of right now, this company hasn't met any of those criteria, which is why I am not invested into this company. There is a clear difference between investors trading based off of near-term news and excitement versus a long-term risk analysis. I personally am a long-term investor, and the risk-to-reward ratio for me is just not in it right now for long-term. But if you are a near-term investor and you believe this company could undergo a short squeeze or even increase their overall share price in the next year or two, then feel free to do your own research, but make sure that opinion is backed by hard data. Clearly, it is possible for this company to have a bullish outcome, which means the share price could rise, but considering the overall downwind expectations that we have seen so far, as well as just human emotional reactions, it looks like the primary data looks like this company will fall further in price at least over the next year. It's also worth noting that Mullen did have a positive catalyst recently, which caused the overall MULN stock price to bounce pretty dramatically, which followed a mid-December catalyst where Mullen disclosed a $200 million order for their vehicle cycles, which is very positive for this company. But bears overall are pretty confident that the MULN share price will move further down, or at least in a downward trajectory over the next few years. So it really depends your risk tolerance and where you land on this company. But as for me, I am not investing into this company as of right now, but I would love to hear your thoughts down below. Up next, we're going to talk about SoFi Technologies to determine if this company is being manipulated in regards to their share price. SoFi Technologies is a fintech company or a financial technology company that essentially operates as a completely digital bank. Right now, the share price is just trading at $4.60 per share, while investors believe the company could surge to around $7.33 during the year of 2023. Shareholders right now are looking into this company to determine whether or not it's being manipulated in their overall share price, because many investors believe this company is undervalued right now. We also have news from management saying that a reverse stock split could be coming from this company if it drops to around the $3 range. So let's look into this company to determine whether or not the shares are being manipulated by a certain shareholder group. So what is the most dominant group that holds shares? Well, as of right now, 48% of ownership of this company belongs to individual investors, which makes it extremely difficult for this company to actually be manipulated in their overall share price. We have another 37% ownership of the company in which various institutions actually own this company, and we could see some price manipulation there, but overall they don't own enough of this company, and they don't collectively together own enough of this company to actually manipulate the share price in any meaningful way. On screen, you can see that the general public owns around 47.7% of the overall ownership of this company in terms of their overall shares, which would mean that individual investors are the primary shareholder group for this company, which means no, there is not a lot of price manipulation for SoFi Technologies. The next largest group would be institutions owning around 36.9%, which could cause some price manipulation, but unless all the institutions paired up and teamed up together with one another, I highly doubt that's going to be the case, and as of right now, we don't have any evidence for that. The next shareholder group that would be in power in third place would be the individual insiders and people who manage this company, who own around 10.4% of this company. And then lastly, we have various public companies that own 4.9% and state or government companies or institutions that own 0.04%. So from this, we can conclude that no, there is little to no price manipulation happening with SoFi Technologies' share price. But let's go into the various risks that these types of ownerships communicate to investors. Institutional investors, like we said earlier, do have a fair amount of ownership in SoFi Technologies, and that implies analysts who work for those financial institutions have looked at the stock and they actually really like the stock to where they've convinced the institution to buy more of this company. But just like anyone else, analysts could definitely be wrong, and it's not uncommon to see large price drops in a stock or company if two larger institutional investors decide to liquidate their shares. So clearly, if institutions all of a sudden change their mind on this company, this is going to cause the overall share price to drop. But as of right now, it seems that analysts as well as institutions which the analysts work for are actually pretty positive on this overall company, which is great news for investors. We do have another updated metric concerning their profitability, which could happen at the end of 2024 or the beginning of 2025. According to the chart on screen, we can see that this company is set to achieve profitability at the beginning of 2025, and this is not a very good forecast because originally they were supposed to become profitable in the beginning of 2024, then the middle of 2024, then the end of 2024, and now it's the beginning of 2025. However, this does clearly determine on what forecast model we're using, as well as what analysts and professionals we are getting this information from. So for me personally, I would say the end of 2024, while this particular financial institution believes it's going to be in the beginning of 2025. So all in all, I would say instead of the end of 2023 or the beginning of 2025, we're probably looking more toward the middle of 2024 or end of 2024 when this company actually becomes profitable. This is going to act as a phenomenal catalyst and hopefully increase their overall share price. Now, what I do want to highlight about the overall ownership of SoFi Technologies is that not many hedge funds own this company. Hedge funds are smart money, or people that literally manage money for a living, and their main goal is to prevent their investors from losing money. And it really is concerning concerning that not a lot of hedge funds own SoFi Technologies, but as of right now, it makes total sense. Hedge funds normally, including myself, wait for companies to prove themselves beyond profitability before investing. And because SoFi Technologies isn't a profitable company right now, it doesn't look very appealing for hedge funds because it means that SoFi Technologies is rather risky as opposed to when they actually become profitable. Now, the good news about SoFi Technologies is that they do have very large institutional backing from Vanguard Group, who is one of the largest shareholders of this company. And there are other institutions just like Vanguard Group that own SoFi Technologies in their overall massive portfolios. On top of that, it's very bullish and positive that insiders, including the CEO, management, and various executives, directly own SoFi Technologies in their personal portfolios. And this means insiders are confident that the future share price of this company is going to be substantially higher than the current share price, meaning that if we do exactly or very close to what insiders are doing, we will most likely make a lot of money off of this particular company. However, just like analysts, insiders can also be wrong on the future share price of this company. A recent study on ownership data for SoFi Technologies came out, and it said that there are around 25 top shareholders that collectively own less than 50% of the overall ownership in shares registered for this company. And that implies, listen to this, no single individual has a majority interest, which means, again, this company is not being manipulated by an overall person, institution, or insider. And that's very good news. It means the ownership for this company is very diversified. The reason why the share price is actually trending downward is due to macroeconomic factors, such as increasing interest rates, getting inflation under control, and various economic problems, but nothing necessarily is wrong with SoFi as a company. It's a good thing that we see relatively high insider ownership for this company coming in at around 10%, which is not bad. However, this can be a negative because if we see any insiders selling, this could encourage individual investors who are the majority owners of this company to also sell their shares. Essentially, you don't want to be a sheep and just follow what other people do. You need to do your own research to determine whether or not you are going to hold this company for the long term or if you're going to trade this company in the short term. I myself have less than a 5% allocation to this company, but I plan to hold this company until at least 2025 when the company becomes profitable. But overall, I'm pretty confident in this company because insiders such as the CEO, COO, CTO, and various executives own around collectively $446 million in this company. And for a company whose market cap is only around $4.3 billion, this is a very substantial development. So investors are investing alongside management, and it means that management needs to look after shareholders because they themselves are a shareholder as well, which concludes that the overall share price is very important to them and they want to see that share price to be built over time. So overall, this is very good news for SoFi Technologies. Up next, we're going to talk about another electric vehicle company named NIO, which is located over in China, and they recently released their December fourth quarter and full year 2022 delivery update results. And this is pretty positive. Right now, NIO is trading for only $9.75 per share, while investors believe this company could surge up to $19.71 over the next 12 months. So let's discuss why this is. NIO is literally a pioneer, and they are a leading company in the premium smart electric vehicle market, particularly over in China, but they are trying to go international. They already have a pretty good setup over in Europe, and eventually they're going to come over to the United States. In December of 2022, NIO delivered around 15,815 vehicles, which represents an increase by 50.8% year over year. That is an amazing, astounding, and absolutely crazy growth rate for their overall delivery numbers, so I'm very pleased with that. NIO delivered around 40,052 vehicles in the 3 months ended December 2022, and that would represent an increase of 60% year over year. And for the full year of 2022, they delivered around 122,486 vehicles, which represents an increase of 34% year over year. So if we look at cumulative deliveries for NIO, they have delivered 289,556 vehicles. Clearly, this company is rapidly scaling, and as the share price drops, it just becomes a better buying opportunity. I'd also want to mention that in December of 2022, NIO won first place in the 2022 China Society of Automotive Engineers Science and Technology Award for its battery swapping technology, and that's a very big deal. It gives them an award that their competition did not achieve, and it really just separates them from Li Auto as well as XPeng, which are arguably just as good, if not better, than NIO stock, depending on your overall risk tolerance and or growth trajectory. But I personally really do like NIO. As of December 31st of 2022, NIO also deployed a very impressive range of networks, including power swap stations as well as charging stations. For instance, NIO deployed around 1,315 power swap stations and 1,228 power charging stations, with 6,225 chargers and 1,058 destination charging stations, with 7,159 chargers worldwide. So essentially, their battery swapping station is where a NIO vehicle can pull up to the station and they will replace your battery with either a newer battery or a fully charged battery, which is fantastic. On top of that, they are building out their overall charging station network, which is paramount for an electric vehicle company like NIO. So overall, very, very good developments in terms of NIO and where its future growth trajectory is headed. This doesn't mean that the NIO share price will only go upwards. Clearly, based on macroeconomic factors over in China as well as the United States, the overall share price could continuously drop, but it's good to see that investors are overall pretty bullish on this company and they believe the company is undervalued right now. So if you hold this company for the long term, you could come out on top. Lastly, we're going to talk about Tesla and where that company could be in 2023, and what are some things Tesla could change that could cause the overall share price to soar. Let's start off with the current share price. Tesla is an electric vehicle manufacturer, but they also specialize in energy generation and energy storage. Right now, the TSLA share price is trading at only $123 per share, an excellent buying opportunity, much better than buying it either a year ago or even 2 years ago. While investors believe this company is highly undervalued right now and could surge up to $250, and experts agree. Overall, Tesla has had a very bad 2022, so it's really great that we're in 2023 now, but again, the overall stock market had a pretty bad 2022. TSLA shares have lost around 65% of its value to where now it trades around $123, which is a huge decrease from what it was trading at, because it was trading at close to $352. This fall translates to Tesla as a company losing around $720 billion worth of market value, which has all evaporated in just 1 year. Now, people thought I was crazy by not buying in aggressively when the share price was going up, because I told you so many times in previous videos, and I had so many conversations with investors, that this company is going to pull back. They are too high right now, and according to my own analysis, I was waiting for this exact moment. I'm going to start nibbling at Tesla, even though I do think it could go lower in the short term. Overall, the future is extremely bright for this massive electric vehicle company overall. Now, it is somewhat of a disservice for me just mentioning that Tesla is an electric vehicle company, but that's what I just want to mainly focus on right now. Elon Musk even tweeted why the overall TSLA share price is falling right now, and he says, and I quote on Twitter, "Macro conditions are difficult. Energy in Europe, real estate in China, and crazy Fed rates in the US." End quote. And I 100% agree with him. The macroeconomic environment is very negative right now across Europe, China, and the United States, and clearly this is going to act very poorly for innovative technology growth stocks such as Tesla. However, clearly this has made Tesla an easy target for critics, to where one critic says, and I quote, "I agree the Fed sucks big time and the macro is deteriorating, but Tesla is doing super well and should be outperforming its tech peers like Apple. Should have at least 2x Apple's PE ratio, which is their price to earnings ratio. On a bad day, Tesla should be around $250 a share." Elon Musk also previously said that Tesla is executing better than ever. "We don't control the Federal Reserve. That is the real problem here." And I agree with Elon Musk. Literally nothing fundamentally has changed about Tesla. This actually reminds me back when Amazon went to $100 and then all of a sudden the share price dropped from $100 down to $90, down to $70, down to $50, down to just $10. But Jeff Bezos was so confused because he says that Amazon was doing better than ever. But it's just because market psychology and investor psychology saw the share price dropping, so they sold because they didn't have enough confidence in this company. We're seeing this take place place with Tesla right now, where the share price is dropping, but nothing inherently is wrong with Tesla, and if anything, it's executing better than ever, which gives me, as a long-term investor, a great investment opportunity overall, and I think throughout 2023, this company could do phenomenal. Lastly, we have an analyst chiming in, and he lays out 10 action items for Tesla that if they follow this, they will have a phenomenal 2023. And I actually like a lot of his criticism, even though I think in some places it's overly critical, but overall I 100% agree with this particular analyst, and I think if Elon Musk follows this, the Tesla share price could literally go to the moon. He lays out a list 1 through 10, but I'm only going to cover 1 through 8, and he says, name a CEO of Twitter by the end of January. If you're not familiar with what's happening with Twitter and Tesla and Elon Musk, go ahead and look up some of the previous videos I did on Tesla. Essentially, Elon Musk bought Twitter, and now he is looking for a CEO for Twitter so he can focus more on his other companies, which I think is a good move, but he needs to act fast. Next up, he says to stop selling stock. Insiders of Tesla should stop selling stock so they can give more confidence to investors. And Elon Musk has even said recently in a recent interview that I listened to that he doesn't plan to sell stock unless it's absolutely needed for taxes. And that is a fantastic development for Tesla shares. Number 3, it says lay out conservative 2023 delivery targets. And I think this is again going to increase investor confidence about what Tesla is projecting for 2023. It's actually better to release conservative numbers and over-deliver, because it's better to under-promise and over-deliver than promise something that seems very positive at first and then you not meet that goal. So again, I agree with his number 3. Number 4, he says focus attention back on Tesla and not Twitter, which essentially is the same point as number 1. Next up, he says announce Cybertruck deliveries will hit the road by the end of 2023. Again, people are really looking forward to the Cybertruck, and that could act as a very positive catalyst for the overall TSLA shares. Next up, he says add some new additions to Tesla's board, and I don't really think that's here nor there. I think they already have a decent board and decent management, but overall it couldn't hurt. 7, I absolutely love buybacks, buybacks, buybacks. Have the company buy back their shares, particularly while they are cheap. This not only will again increase investor confidence, but it's also going to be very fruitful for the company over the long term. And then lastly, release more transparent financial metrics so people like me and other financial reporters can dive into them and get people excited about this stock once again. Overall, Elon Musk has not reacted to this analyst's advice, but the author of this article says it's a safe bet that Elon saw this tweet, considering that it is extremely loved and it was retweeted multiple times by a very prestigious analyst. But all in all, I would say Tesla is primed for growth over the next few years. But I would love to hear your thoughts on Mullen Automotive, SoFi Technologies, NIO stock, as well as Tesla. Remember to go and smash that like button right now, subscribe if you are new, comment down below what you think of any of these news stories or the overall stock market in general, and I will see you in the next YT video.